The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour on this 21st day of August, and what a session it is. The Dow is down 250, S&P is down 31, the comp index, let me just check it out. Yep, the comp index is down 94, and we're looking at the gold contract up only 3. This is very interesting, bumping into strong resistance at 11.56. Silver's down 28 cents at 15.23. Platinum's down, high-grade copper down, now it's under 2.3. Whew, not good. Bonds are only up 30 seconds at 128 and 18 30 seconds. Whoops, that was a mistake, 160, sorry. 0.02, it's down just a penny. That was the TY, it was the 10-year. Let's look at the dollar. Right now, the dollar is at 95.18. I'm going to talk about that right now. Great British Pound's down, and the euro should be up somewhat, and I believe it is. Let me show you something here. First of all, this trend line here at 2000, at 8. I'll give you the exact number. This trend line right here at 1992, it's going to be very important in the S&P E-mini. Look at this arch formation made from the peak E-top at 2126.25 in the weekly chart. And I had given a down arrow a little early in terms of the relationship to the technicals and the price, but the technicals suggested that there was no way there could be a very sharp rally. Plummets down this week. Goes all the way from the 2100s to where we are right now at 1998. Most importantly, this is a sell signal to a sell mode. Doesn't matter what happens intraday today, because I can't see more than a 15 to an 18-point sudden reversal to the upside if there's going to be one to the upside. And either way, we're going to be under 2069, the 9-period exponential moving average. So the chances are we've got sell modes with a sell with 1 week to go. The monthly chart is, I can't show you the monthly chart because this is the E-mini. I'll get to it in a moment. I'm going to show you all the different charts. Let's just do this. You've got the E-minis down 26. You've got the Dow down right there. The Dow down 265. The arch formation, oh my, I never believed it could happen. It just looked impossible the way that the price was holding. You know the technique I used with the Chapman wave inside wedge and the Chapman wave left side, right side price time match going to the 17,037 to 17, was that 34 or 37? 17,037 low of the week of, that was on the 2nd of February. We did it today, exactly, plop. What a wonderful technique. I wish I had believed in it a little bit more. Why? Because we had the TVIX, which is the 200% long, the VIX. We took profits this morning, and now it's this is one of those times where I say to myself, probably this is the day to stay in, but a 26% gain is, some people got even more than that. But now we got in at $5.69. It is trading at $8.45. That is an incredible gain. And but we got out early, and I see, a profit with these things, we've got to take profits, but we do have other shorts that are just screaming. It's amazing how this is working, this acceleration to the downside. So let's just go on. We've got the Dow. Very important to hold. There isn't really anything but that bar right there. It's not even a trough at 16,729. We've already taken it out. So the next level of support is the October low. I know Tom's been talking about this October low for a long time. And there it is, 15,855. Great call. This is the October low of 2014. Shouldn't say 15. That would be a little anticipatory. Hey, maybe that's exactly what we'll see. But anyway, it's October, the week of the 17th of October, 2014. Remember, October the 15th was that reversal low. I was in Australia at the time. Had to send out an email saying cover shorts and start to go long. Okay, so this is very important. And I had a statement saying yesterday you were talking about the VIX index going to a D. No, I said that the VIX index, I made a big deal about it, was that the 120-minute chart was absolutely going to a D, and that there was a chance that we could be going to a D in the daily. And then we did it again. I said, I'm going to take that low of 1088. And in this case, I'm going to be cautious the other way around and say this is still a C, if you remember correctly. So yeah, this is still a C. And now you've got this whopping move to the upside. It's not an 1088 would start a brand new move, and this would be a leg B to the upside in the VIX index weekly chart. Wow, this could be the first week that not only are we above the 1621 200 period exponential moving average in the weekly chart, we are at 2374. Scream, oh my goodness, and look, there's the left side, right side price time match in the VIX index. And it came in 1 day early and broke the 20.05 left side low. Unbelievable. All right. So nice. It could have been very much nicer. That's the way it goes. You've just, in the market, you've got to do what you feel you're comfortable with. So now let's do a couple of things here. We want you to look at the S&P, SPX.X, and then I will take some questions. SPX leg D down in the S&P at 1997, down 38. Definitely a smash to the downside. This week really culminates what I've been talking about for an entire year, that we will be breaking key support levels on the left side, and that we are in for a longer term, not just a short-term decline. The monthly chart now under the 9-period moving average, you've got 1 week to go to try to get above 2048. Let's call it 2050 to really say, hey, save the day. I'm not sure it's going to be able to do that. Let's run the other things here. I said I'd look at the dollar. I wanted to explain something here, being Technical Friday. You remember I discussed this quite some time ago, weeks ago. I said that I'm calling the chart formation in the Dow, in the dollar index, a Chapman wave, unconventional flat base restart. And I made a big deal about how verbal this sounds, but it's explanatory. What it does is it explains to you that there is an instant restart right there. Let me give you the actual numbers. Instant restart going from peak D on the 2nd of July with the 3 days breaking above it in a very nice pattern, the MACD and stochastic, and going to 96.63, and then pushing even higher the next day to 97.24, making an E/A because there's a chance of an instant restart. Then the next pullback not only took out the left side low right there of 95.87 from the 3rd, the very next day off to make the peak D, it went lower. And what I'd said is if we break to the upside again and go quickly to a new recovery high above 97.24, I'm going to type in here Chapman wave unconventional flat base restart. And then I also put a left side, right side price time match. And I took it from the low later on. I took it from the low that was at 96.29 on the 27th of July. And I said, there is a chance that I'm going to have to recount and rename these. And if we get to a letter that is unconventional, I'll use the technique of the instant restart to go peak A, B, C, and if it gets to a D. It got to the C and was pulling back. And what I'd said the very next day, in fact, I remember distinctly saying, everything about this with the MACD and stochastic suggests to me that there could maybe not be a D. This is not a D right here. Only if I use the instant restart do I get a D. And we've got to be real careful because the dollar, if it starts to make the 9-period moving average resistance, could in fact, in this particular technique of the Chapman wave, the flat base restart suggests that you're going to come back and retest the low. The Chapman wave unconventional flat base restart says you're going to keep coming back down, but it's going to take a while, and you can go to a D and even an E. And then when you come down, you smash through the low of the left side, in this case 95.45, which is what we're doing today. So that's another way of saying arch formation, left side, right side, price time match, inside wedge, 1 day late, and we've gone plop, and we've gone underneath. And the techniques also talks about the technicals, which are very poor at this particular time. So let's go from here to the weekly chart of the dollar. And I'm going to just check one little thing here. I had a question about the TLT. Okay, we'll get to that very soon. There's the right shoulder. You remember I drew this in as an arch formation, saying this is that H or right shoulder failure pattern in the Chapman wave technique as the MACD deflects lower. And that places us in a very unusual position. Why? Because the euro is screaming to the upside on the daily. The weekly is improving a lot, not screaming, but improving a lot. It has to break above 1.14659, the high of the week of the 15th of May, to get to leg C. But if you're looking at the monthly chart, this is save the day. This is making, I think this is making another arch formation. This should coincide with gold having a bounce here. And I suspect all these guys are going to fail when the stock market eventually starts to get back on track. But in the meantime, commodities, not all commodities, but some of the commodities could have a pretty decent rally. And we're going to see if this cup formation, let me just draw this for you right now. Cup formation in the Euro USD. This is the Euro Japanese yen. I'm sorry, this is the Euro dollar currency pair. I was doing two things at once, and of course, makes it easy to make a mistake. Right there. And that should go to today. So we haven't broken it today. And it says that the inside wedge from there to there. All right, so far, we're a little bit behind. This is the day, and this is the price, and we're underneath it. 1.135 is the high today, and the level we're trying to aim for is 1.143. Okay, now let's do a couple of other things. Within this context, we're looking at, so the euro is rallying, the dollar is weak, and now let's just look at some of the sectors. The semiconductor index has absolutely taken it on the chin. And all of a sudden, at 40 in the 47s, this is in no man's land right here, because 44.43 is the downside target. But at this particular point in leg D, let's just look at the 120-minute chart, it is suggesting that we're getting somewhat close to at least trying to find support in the 47s to the 46s. Now, we've had the SOXS as a long position. And look at this, at 69.34, we're in at 40.63, and we've had it, and we've in and out. The core position is still on hold. So 40 to 69 is a huge gain. I must say, I was suggesting that this is the day that I should be thinking about taking profits, but how do I get back in at such a great price? So I might just have to leave that position and wait for a 15, maybe even 20-point pullback before maybe adding. I'm not sure about this, but boy, that is a whopping gain. Leg C in the weekly chart, and the IBB hit that exact 200-period exponential moving average, 200 right at 342. Amazing. Trading now at 345. And we've been short that as well. I'll be right back. Basil Chapman, Tiger Technicians Hour. Be right back. Dow's down to 273. S&P's out 33.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's down 301. S&P's down 37. Let's go to our first caller. We got John in Philly.
Basil,
Hi, John. How are you?
what a day to speak to you, sir.
Well, great day to speak with you. What can I do for you?
TLT. Basil, I'm interested in your view in trying to answer this question. First, I'll tell you, I speculate with the selling in stocks in the U.S. globally and a rush into fixed income. My speculation would be that sometime in the future, this trend will be the catalyst that forges a tradable top in bond futures, TLT, and the like. And I noticed just today, it is just too coincidental that at least my count on the TLT daily charts, the Chapman wave count has just surpassed peak F into leg G. So with just those couple of thoughts, could you share with us what would be the set of conditions, what you might be looking for to institute low-risk short sells on that instrument sometime out in the future? Certainly not today, of course.
Okay, good. That's it's a good question, because I think that's a question that for professionals, not the amateurs, but for professionals, they're looking at this and they've heard for I don't know how many years now that one of the great shorts is the bond market. And I would suggest that they go back and rethink that whole concept and think about what happened to the Japanization of bond yields when Japan held for 20 or more years almost a zero rate. And I think that economic conditions are suggesting that the Fed is not about to do anything. And then if they do raise, the bond market might just ignore it. And that would be very, very interesting. That'd be one of the first times we've seen something like that. But let's just be practical, and I'll talk to you numbers. If you look at the TYX, which is the 30-year Treasury bond interest rate, you will see that although it's dipping at this particular point, it's at 2.746. That's percent. 27.46 is the number we're looking at. It is that arch formation that is so important, and the technicals, the MACD is deflecting lower, the stochastic looks poor. So I don't, purely on a monthly basis, I do not see a catalyst at this particular point to suggest that this very long term, when I say long term, I'm going to squeeze this for anybody who's looking at my charts for the first time. You will see that this 30-year Treasury bond interest rate had a high in 1981, and at the current price, this is the current price back in January when I was talking about it in one of my webinars, but this is actually the current price today, the 21st of August. This is 8 months later. What we're looking at is, this is the down channel, the actual channel that started back in 1986 to 86, 87. Now, under every other condition, you would say to yourself, how on earth could anything last to have a 30-year bull market or a bear market? How does, without even, I'm looking at this chart, I don't even see anything that's a major correction. It just hasn't happened. So the likelihood that at some point you're going to get a screaming move to the upside in rates is there, but the catalyst is not, because if we have a slowing economy, which I believe we have right now, then what we're looking at is something a little bit different, because the Fed is going to say, you know what, maybe we should hold off. And that's what I think they're going to do, even though they're really tempted in September to do something. My guess is that the stock market is going to suggest to them very loud and clear. It's not going to suggest, it's going to hit them over the head and say, are you crazy raising rates right now? That's my thinking. So that doesn't mean to say I'm right. It just means to say that that's kind of, in a way, it has been my mantra for so long. I've got to be careful not to get locked into something without constantly looking in a critical way. But when I look at a critical way, the weekly chart has made a peak E at the 200-period moving average. This is the 30-year yield. And it's pulling back very sharply. And we saw the pattern just this morning. You know, patterns repeat over and over. It's either a straight line move, or it's an arch formation or a cup formation. And there you saw the arch formation, and it broke to the left side. So all I'm looking at, I'm saying, when I'm looking at this particular chart, I'm saying, well, if patterns repeat, then the 29 level is very strong resistance in the TYX weekly chart. And the big support would be around about 24.45. So my bias is still to say, I think that rates are going to go lower, bonds are going to go higher. So that doesn't answer your question specifically, because your question really is, what would be the trigger to even start contemplating short positions? So if I can get to that, will you hold on?
I will, thank you.
Okay, we've got John in Philly, we've got Scott in Safety Harbor, Mike in Ormond Beach. I'll be back with everybody straight after this break.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're back with John in Philly, and we're talking about bond yields. We're talking about where would be an appropriate place to start thinking about doing, shorting. And all I can say is that, John, I know that you look at this very closely. If you look at the Philadelphia Housing Sector Index, I've got a peak F in the daily. It's down 4% today already. The high was 250, 220, and it's trading at 240. This is no big deal for but it's the Eiffel Tower, straight up, straight down pattern we're looking at. Leg D in the weekly, and the monthly is in leg D. If I look at the ITB, which is one of the iShares US Home Construction, I've got a peak F right here again. Same thing. I've got E right there, and I've got an F in the daily. It hasn't closed, but I'm going to just be a little brazen here and put down a down arrow, even though the MACD is still pretty good and the stochastics at 85%, just because of the pattern that I'm looking at. And I've got an A, B, C, D, another D, a second D in the weekly chart, and a leg F in the monthly. I just don't see if I'm correct about the housing sector now finally starting to take a real dip. Then, and I saw this in Brooklyn, I actually have time today. Maybe next week I'll talk about it in a little bit. But I think that the Fed is really stuck. I don't think that they're going to do that. The next report on housing won't come out for a while. Maybe it'll cross their September minutes. but maybe they're already looking at some of that information and they're cautious. John, I would look at this. If the housing, the ITB and the HGB, the Philadelphia housing sector, break to new all-time highs, then I think the Fed will say, hey, wait a minute, that's one of our metrics. Good sales, prices are going higher, the indexes are going higher. Now we can afford to put an extra quarter point. We'll do that. I don't know if you agree, but that's kind of my thinking.
Basil, thanks so much for sharing that, and thank you for showing that daily, weekly, monthly on the TLT. I notice your labeling is the same as mine, and thankfully I've learned how to do the Chapman wave labeling. I see that at 126.35 on the TLT, just in the past half hour. The TLT daily is now in leg G/C to the upside.
Correct. Yes.
And I've always found it as a trader, using a technique of actually taught to me by Saratoga Bob from the Tiger's Den. I got to give a hat tip to him, of looking for exhaustions using 30-minute charts, placing shorts in this case with stops just over an anticipated peak G. Do you see anything that is fatally flawed with that sort of idea as applied to TLT?
I don't see it right now. My preference actually was to call it C rather than G/C, although technically I should keep it as a G/C because it didn't have an instant restart, and then the MACD held and then deflected higher. But the 120-minute chart suggests it could go a little higher, and that might give you that D early next week. And then you can start looking at it as a potential, just a little pullback, but the weekly chart is getting stronger and stronger. So unless the weekly chart breaks 100, closes under 122 and then over the next 2 weeks, so far the TLT is acting very well.
Basil, thanks so much. I appreciate your view on that.
Thank you very much for calling. Always appreciate your probing questions, John. Thank you. Let's go to Scott in Safety Harbor. Scott, how are you?
Had to call you and give you, I'm sure you were happy with your call on Apple, and it was just straight on. We both agreed yesterday that it was having some trouble, and I got out yesterday, as I told you when I was on the phone with you.
Good. I was really pleased.
Able to get in today at 108, and usually I like to something like this. I just almost was ready to try to get a little greedy and grab $1. I grabbed 80 cents, and boy was I glad, because I think we're in rough waters again here.
Yes. So folks, just to recap, yesterday Scott called. We were looking at Apple. My suggestion was, based on the technicals, that I thought the upside was really limited. There were certain levels on the downside that said if it took that out, it could retest what I call the Roman candle of the 12th of August and test the 109.63 low. And what happened was Scott told me that he was already out of his position, and that's really good. I was really pleased by the end of the day when I was looking at Apple. I thought, wow, I'm so pleased.
As I was.
I know. So congratulations for having the foresight to look at that and be very pragmatic, and you took your profit and you got out.
And
nice. Now you can have a great weekend.
For the listeners, you got to watch this market every minute. If you're not going to watch it, if you don't have time, put in some very, very tight sell orders in, but don't get greedy, people, because you will get, it's not going to end up pretty.
Right. I agree with you exactly. Hey, congratulations. That was a very nice trade, and we'll see what happens next week.
Basil. Thank you very much.
Thank you very much. That was Scott in Safety Harbor. Mike in Ormond Beach, how are you? Listening on the computer, so it's a little... Oh, Mike, I'm sorry you had to wait. I should have remembered that Mike can't wait too long. Mike wants to look at DXD. So Mike in Ormond Beach, I hope you're able to listen. Maybe you aren't able to hold. DXD, I want you to do this quickly. Look, DXD is the 200% short the Dow. It's the ultra short Dow 30 Pro shares. I've got it now in leg E. Let me just show you give you the notation. Mike, you're back?
Yes, I am, Basil.
Great. So what's the story? You've still got your DXD, and what are you doing with it?
Okay, here's what happened. I had a tight trailing stop because I work during the day. I can't watch it. And then Tuesday, when we got whipsawed from the Fed news, I got stopped out with a little bit of a profit. But I'm wondering if I could get back in. I mean, I'd hate to get in now, but what's your opinion?
Okay. So let's just look at this, folks. We're looking at what a shame. You know, it's part of trading, and you got to accept it. Just like we took profits today in the TVIX, and it's screaming up at 862 now. It's $1.30 higher than where we got out. That is incredible action, over 20% just today alone. I think we were happy with 26%. We could have almost doubled that. Now, what we're looking at here is the same thing happened to you in the DXD, but that, you know. One of the criteria one of the reasons why there are some positions in my opening call that I've just refused to get out of is because I think we got the price at the perfect level. We actually have had the short position on the Dow many times. I wanted the newer investors who have never shorted before, we've been doing this since the beginning of the year, to buy the DOG and have a slightly wider stop. And just hold that, because that's 100% short, and you can at least sleep at night. It doesn't have such huge moves, but at least matches the Dow. As the Dow goes up, it goes down, or as the Dow goes down, it goes up, and it's more or less the same percentage. DXD is a little bit of a different animal, so that's why your stop, you had to have the stop in. It's a shame you're taken out, because it's gone from the 21 area, 20, where you got probably taken out. It's at 23, so it's up 10%. However, the entry point, the next entry point, is really, I don't think it's here. The risk reward is just A, B. In the 120-minute chart, I would have to say A, B, C, D. So I can't use that.
Yeah.
Yeah, I'm just looking at it. I would not want you to get in now, even if by the end of the day the market goes down even another 100 and something points. This is if you had a stop in before, then to buy it now, the risk of hitting your stop is really, it could be within an hour that it could turn around and hit your stop. So I'm going to suggest to you, don't worry. This market, let me show this chart. I haven't had a chance all day to do it. Here's the chart of the Dow going back from October all the way, making this beautiful arch formation, and at the low today of 16,652, it is suggesting that the 17,000 to 17,100 is major resistance, and that we're going to lower lows and lower highs. So I think you'll have an opportunity, and I'll give you a number that I think might be appropriate. It's at 23.28 right now, DXD trading at up 81 cents, up 3.6%. My thinking is that if it pulls back towards the 22, well, it depends on how vicious a turnaround is going to occur. It might even start today because there's options expiration. But I would not do anything. I'd probably say to you, you need a little time and you need price. So I wouldn't just jump in now that it's making recovery highs. In leg E, I would say to you, let's wait. I think if it comes back under 2220 to 2190, that's kind of the area that should start to find support, but it might not even be a buy at that point. I would rather give it 3 to 4 days.
Okay.
And then we'll look at it again. Have patience, because I think we're making big steps to the downside, and the upside will be limited. So just have patience, because the other thing is just say, hey, nibble here at 23.23, and then you really put your position on lower down. I don't think it's worth it. Nibble and you get a point and a half or something. I don't want to do that. I'd much rather have you get into a position lower down, saying that the weekly chart is suggesting that it's going to go to a D. That should be the way it works. It should be tackling the highs of 23.60 to 23.80 coming up. That was from December of last year. And I think I'll just have a little patience, and then you can enter. And the next time you enter, maybe that's the time that you have to have your stop a little bit wider. That's all.
Right. Well, my next question is, all the points that you think we could get a bounce in the Dow from where we're at now?
Because there's options expiration, we might have seen the low in the futures at 16,622 and in the E-minis at 1989.50. I'm looking at this and I'm suggesting that, give me 1 second here, and I'm suggesting that there's a chance that the downside now is quite limited. I've got the VIX index at, I think it was leg D. It's still leg D, a monster leg D. And I think that at 24.49, I think it's getting close to reversing. That's number one. Number two is the trend index went to 317 as the high. And that's, to me, says that within 2 days, the future should have a very sharp rally that kicks in and helps the cash. So I think we're getting close to some kind of support.
Okay. Well, that's why I didn't just jump right back in because, my risk reward would not have been good. And, I kind of expected when we got down to the 17,125 the other day that we might have bounced off of that and then try to get back in. But we just, as you know, we just...
We went right through the 17,000 millennium support. That is really negative, but it does say now it's going to attempt to try to get back to 17,000 early next week. We'll see what happens. So, Mike, have a little patience. You'll get your chance again.
Yep.
Thank you so much for calling, and have a great weekend.
Yep. Bye-bye.
Good. Let's go to Mike in Toronto. Mike, how are you?
Yes. Good morning there.
Hi.
I wanted to talk about the anomaly between the IBB and the
Yes.
LABD.
Yes.
You notice that the IBB is down today.
Yes.
Okay. But so is the inverse ETF for it.
One of the reasons I would say is that the IBB is down 3 points right now. And I just need to check. So that's EFG/C. One of the reasons is actually the LABD, folks, is the DX daily. This is direction shares daily. S&P biotech bear 3 times. This is what they introduced just recently. Tom was talking about it right appropriately as the IBB was about to start getting smashed to the downside. So this is at a great move. Now, part of it is also because it's fairly new. I wanted to see the volume. I haven't had a chance really to check volume. Oh, there's volume in this. Better than some of the other esoteric.
All the action seems to be right at the open.
On this one?
Always. It always seems to be like I've been watching this thing for the last 3 months. It's just all the action, the highs and the lows seem to be made like in the first 5 minutes.
Okay. And see, I love that kind of information. Why? Because I use that kind of information for when I'm trading the futures or if it was options or whatever, because in little bits of information that you can't really learn from books. That's the kind of stuff that you learn from just doing it over and watching. Thank you for that. Now, let me just say, I believe that the IBB is really close to a pretty darn good bounce. That's just my thinking. It hit the 200-period moving average. Major. Who would have thought at 400 it would go down to the 342 level?
I see it. Yeah, on the daily.
There it is.
There's a gap. There's a gap up there at around 395.
That's a little high. I just don't think that. I think the 360s to maybe 372, a bounce could take it there. If it even has that kind of strength. But there are big sellers in this area. So that's what I'm suggesting, that you got to keep your eye on it. But I think the IBB will bounce. And in fact, it could have started already today. So the LABD, watch it closely. The next time down, so if you get a 1.5 week rally in the IBB, you watch the LABD. If it comes back, it's at 45 right now, 43, 46 right now. If it comes back to the 33, 32 area, that might be where you want to pick it up. Call me and we'll look at it together.
We will. Thank you very much.
Thank you very much. That's Mike in Toronto, and we'll be back with Brenton Martinez, and we'll look at GLD when we get back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back. Let's go straight to, we've got Brent in Martinez, California. Brent, how are you?
I'm doing just fantastic, Basil. How are you today?
Oh, it's I'm good. This is a very interesting day, and yeah. So, what can we look at?
I was going to go through with you a trade I did this morning that I've done on quite a few occasions, and today, to me, it's set up perfectly, and it worked out very well. It's I normally wait till Friday to do the trade. It's in the GLD.
Yes.
And so normally I do the weeklies because of the expiration. This happened to be a monthly.
Oh, okay, good, yes.
Yeah, I was watching it this morning. It didn't make sense to me that gold was going down.
Okay.
It got down till 1148, and so then the GLD got down to just a little above 110.
Yes.
And I really like the options in that. They're in 50-cent increments. So I chose the 110.50s, the 110.50.
The Friday, today is, you mean?
Yeah, with basically today left to trade.
Okay, good, good.
So they dropped down to, I was able to buy them for 14 cents.
Oh, I love it when you can get it on the pennies instead of dollars. That's great.
And then my thinking was that it could go back up to 111, which then would put me, 50 cents in the money. And so that's what I ended up doing. So at the bottom line, long story short, I was able to buy them for 14 cents, and I didn't get everything out of it, but I sold them for 55, and it actually like 70 cents per contract.
That is beautiful. The 10-minute chart has the GLD in a new leg B to the upside, and the MACD is strong, and the stochastics at 90%. So you got, that is a beautiful trade. And, with that H pattern that was formed early on when it started to slide this morning, the fact that it took out the left side low of 110.19, you used some really good technique there, because that arch could have continued down, and it didn't. It turned around and just steadily worked its way above the 9 period. That is a nice trade.
It's a fun one to do. I've done it quite a bit. Like I said, there's always a lot of activity in the GLD, which makes it nice.
Yes.
It's very liquid. I really like the 50-cent increments. It allows you to get it dialed in really closely where you have a better chance of it reaching your target. It's a nice trade. I just wanted to share that.
That's a fabulous trade. Now, see, Z in the Den says he learned from you, and he put a trade that was very similar on, and he says, thank Brett for me. I did that this week. Hey, congrats. This is what we're all about. It's just so nice. And so that's great. And thank you for sharing the actual information here. I love to hear that. That is terrific. Brett, congratulations. Now you can have an even better weekend. Whoops.
Yeah, exactly. Yeah, it's just one of those where there's a lot of things with the dollar being weak, the market being weak. It just didn't make sense that it would stay down at that level. And I mean, anything can happen, but it seemed like there was enough things in your favor to make the trade, and it worked out. So
and you're in and you're out, and I love that kind of trade. That's great. So have a wonderful weekend. Thanks for calling, and bravo. That was a beautiful trade.
All right, you take care, Basil. Have a great weekend. I'll talk to you soon.
Great, thank you. So, folks, let's look at this. We've got the dollar, as Brent was saying. The dollar's down 89 cents. Underneath, you remember the Chapman wave unconventional flat-based restart? You decisively take out the left side low. After that, you've got to be careful, because you could have a bounce. But first of all, you want to get that, and you did it. And now the weekly chart is saying, hey, I might be going down to the 94, 93 area in the dollar. That's good for gold. Okay, now let's do a couple of things. We're about to wrap up, because you got Nico and Nico and why am I? Wait, Nico and Paige. Of course, it's Paige. Nico and Paige coming up. So watch this closely. I think we're about to get a little bit of a turnaround here. The futures are suggesting that. We'll see if the Dow can close down just 130 in the S&P only 18. That'll be a good turnaround, at least to have a nice bounce next week. Thanks for being here, folks. Have a great weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.